Wonderful. Okay, I'm sorry. Are we live on YouTube? I never looked up. Okay, Will, our producer, says we are live on YouTube. Welcome to our YouTube family. Zoom right here, and the Banking Bros on Insta. Good afternoon, ladies and gentlemen. At least where we are, it is 3:30, and I wouldn't suppose we have folks who are not in the afternoon, wherever you may be. Put in the chat where you are on these lives each and every week. The Cash Compound, a few coaches on at the Cash Compound. Get live, get in living color. We share things with you via our Zoom channel, so everyone else may have a hard time kind of seeing the visuals if and when we pull it up. So we love for you to pre-register on a Zoom. Join us there. We can capture some of your information for a trade-off, right? It's not a give to get nothing. You'll see everything, but you'll also be able to hear from us. And we hope that's a positive thing for you as you crack the code to cash flow. So welcome, everybody. What's up, Serge? All right, Serge, I see you there on Insta. Appreciate you, man. Sergio is getting his first contract started right now, signed yesterday, if he's still out there. Congratulations, sir. You're going to meet him. It's a good dude. Fantastic. All right. Camarillo, California. Michael, where is that? Let us know. Robert, where are you?
Los Angeles.
Okay. Near L.A. Gotcha. Okay, so Jonah was speaking there 2 Saturdays ago. Did you see my brother speak? Is that why you're here? Was it in Long Beach? No? Let us know. He's typing it in the chat. Okay, cool. What's up? Okay, yeah, Serge is a great dude. He lives in Greenville.
Oh, super.
Yeah, and he's getting started with his first contract right now. Going to be paying off some debt.
That's what I'm talking about.
Yep. And we've been talking for the last couple of weeks, not really months yet. It's getting close to 2 months, but about him potentially joining the team, actually.
How neat.
Let me get rid of my email so I don't get notifications. Camarillo's in Ventura County, just north of L.A. Love it. So we moved from Kern County. You ready for this, Michael? We moved from Kern County to South Carolina a long time ago. Okay? So Mom went to Mojave High. You know where Mojave is? We were up there near Edwards Air Force Base.
Yep.
Yeah, man.
I do.
So Jonah was actually in L.A. doing a speaking gig. My brother, that's why some of us are called the Banking Bros. It's me and my brother, and the Cash Compound's where we all live. But he was out there speaking and went up to Grandma's house and everything and hung out just last week before.
So she was in Mojave, you said?
Yep. She graduated from Mojave High.
At the LA Expo.
Yeah, at the LA Expo, yes. So you did know of it, see him?
And then I had a phone call with him.
Oh,
I had
perfect.
a phone call with him recently, too.
Okay, well, I'm going to see if I can, one, hear you better. And two, I'm going to see if I can answer questions better than he does. Mom always did like him best, so.
Can you hear me better now?
Yeah, I think so. I turned you up on my speaker here. So, ladies and gentlemen, thank you for being here. Jesse, would you be so kind? We're gonna have to move that to see the chat on YouTube. Yeah, we're gonna have to move it. Okay, ladies and gentlemen, start asking questions right here, right now, before we get into all sorts of training, because we don't want to lose you. We are here for you, and I'll give you a little bit of my story while you type, question, put in your concerns. Okay, we got one here, but I can't move my microphone today because of my Insta family. Okay, do you partner with agents, kind of like being a part of your agency? I am Tico. We might. It is not something that we put as a flagship part of our system. We love to have the right partners before we love to have any partners. So please DM me. Go ahead and DM me. Tell us what you're doing, thinking, want to learn. Maybe you don't know very much and you're like, look, I'm struggling at what I do, but I like you guys. I just want to have a convo about it wherever you are, to saying, hey, you guys are legit. I know what I'm doing. I just need a better environment. Cool. Let's just talk it over. Appreciate you. Okay, ladies and gentlemen, my story. About 9 years ago around this time, I learned of this idea. The idea that we now call the Save and Spend system. The Save and Spend system is simply our kind of marketing swing on helping you understand the infinite banking concept. Jesse and I learned of it actually right about the exact same time. Now that I really think about it, I'm going to say code words that you guys mostly probably don't understand. Go IMD 2015. So this would have been Labor Day. Around Labor, right? Labor Day?
Okay. I don't know when Labor Day is off the top of my head.
September, first week of September.
Okay.
So around September, so 9 years ago, is when I first heard of this concept. I had never heard of it at all before. You guys now with the internet and so many people maybe who look like me, some of them look like Jesse though, quite literally, beards and stuff. You know, people who wear zip-ups. I'm just a hoodie guy. But anyway, you've started to understand a little bit more about, man, what is this? I think I like it. I've heard some of the details. I did not know that type of stuff when I first was introduced to this. Fast forward 9 years later, I have 10 save and spend systems. The product behind the infinite banking concept is whole life insurance, the participating kind from mutual companies. I got a bunch of them now. Me and Jesse understand it pretty darn well. Jesse is a whiz at being able to explain what this system can do for you. So I'm going to introduce Jesse Durham, ladies and gentlemen, from the Durham Talents channel, one of our Cash Compound coaches. Jesse, tell us what it is people need to understand what they can do with this product.
Sure. Well, if I just went with save and spend, that's a good way to start. It's a way for you to be able to add one thing to what you're already doing, one step to what you're already doing, that allows you to both be able to spend your money, because people are used to spending. I just got off of a phone call, actually. Just got off a phone call with somebody before I stepped in here. Retired, so worked a full career in her field, right? And now she's in that phase where she's actually looking at 2 and 3 jobs to make up for the change in income. So it doesn't matter where you're at in life.
I hope she loves them.
I'm telling you, she's ready for something different. And,
okay.
Everybody that's jumping on here, you know now. So we're used to spending money. We're told to save money. What we teach people is how you can do both at the same time, of course. You're going to spend the money, great. But save it and spend it. That way your dollars are doing more than just the one job. They're not just leaving you forever. They're building something for you. You're keeping those dollars, and you're spending at the same time.
That's right, ladies and gentlemen. That's what we do here. So we want to answer your questions. Let us know right now in the chat, wherever you are. We do have friends. Hello, what's up? Dallas Fort Worth out there on YouTube. Awesome. We love you guys out there. I believe our YouTube channel is still called The Banking Bros, and we might try to change it back to The Cash Compound. Boom, where we're cracking the code to cash flow. But welcome out there to Nelson. Oh, Nelson, what's up? Yeah, I know Nelson. Yes, okay, Nelson and I have spoken recently.
Cool.
And I'm glad to see you back, my friend. Okay, so Michael's got a question here. We've got our first question from our Zoom audience, and what we're going to do is remind you to go to the links in the bio, wherever you are, okay? Try to find those links in the bio because we have lots of resources. We're going to put those links in our chat on Zoom for our audience in Zoom, and if you want a one-on-one consultation about potentially doing this process for yourself, then Jesse is your man. He's taking calls this week, and he's helping people get their questions answered. Jesse, you're not going to charge people for these combos, right?
Nope. Free consultation.
Okay, perfect. So
we can have more than one.
There we go. If you'd like to get it set up for yourself, maybe you think, but you got questions first and concerns, Jesse's your guy. I'll drop that link here, but you can also go to links in bio to be able to connect with us. We have a full 60-minute visual presentation. It has numbers in it. We give you representative ideas and illustrations while we're here. Sometimes we have the 3-cup setup on the table. Jesse forgot to bring it. I forgot to bring it. So it's in the next room. But the slides that are in the video presentation, oh, they're awesome. They'll help you out a lot, and you'll even see numbers. Okay, welcome.
Would you like me to be your cupbearer? Is that what you were saying?
I love the cups so much. I wouldn't mind if you got them. Wouldn't mind if you got them. They're by my desk. The 3 cups plus our dividends. Little cash is by them. I broke one of the cups, Jesse. So, who can provide me with information to sign up for a whole life divided payment policy? Michael, that's what we're here for, sir. Michael, you said you talked to my brother, and then you joined this, and you're still wondering who can help you. Michael, you made it. You're here. If you'd like one, that's what we do.
Yeah, but I need to speak with someone specifically about getting a policy.
Yeah, 100%. So I'm going to put did you already speak? If you already spoke to my brother one-on-one, did you call him after that event that you went to?
Yes, I called him and he told me someone would reach out to me, but I never heard back.
Oh, okay. Well, that is our bad. So now I understand. Okay, cool. So this is what we're going to do. I'm going to drop Jesse's link for you in the chat right now. Okay? Right now. You can click that link, get on his calendar. We're going to walk and talk you through. Hey, heck, you'll get half of your questions answered in the next 30, 45 minutes if you like.
Yep. When I see that in my email, I will text you directly today.
Okay. He'll text you today. Yeah, we'll get you set up. Sorry about that. Sorry for the confusion.
Well, I think he's just been busy.
My brother is busy, and he just walked out of the office. We're all kind of busy these days. We've had some changes in our office. Some good people who have policies and things have kind of moved their schedules around. We've had two berths in our office. There's probably a core group of about 10 of us who have some of them different roles. Not everybody's on the phone, but two berths. The latest berth was yesterday from one of our folks. So yeah, it's been nuts. Okay. So here we go. Let me answer more of your burning questions about this process. What we did 9 years ago in our family is we decided that we were going to save our money in a place where we had a lot of great guarantees first, and second, benefits. I'm going to call them benefits. But guarantees is where we start. Most people come to the infinite banking. You literally didn't pick up any of the cash? There was cash touching at least two of these cups. Okay, lots of people out there. I'm sending Jesse on. Okay, so we decided to save our money in a superior place to where we had been putting it. This is the conundrum that I didn't understand when I first started this process, folks. Infinite banking is not an investing strategy. It's not an investing game at all. It is a strategy for solving the banking function, but I think it's a little bit simpler sometimes to say it like this. It's a place to save your money where you have guarantees and perks. When we give an insurance company money, that's the red cup, cup number 1 out there. All right, Nelson, it's okay. It's okay. I'm sending him on wild goose chases.
Oh, what's Nelson saying?
He said, oops. I think he's probably talking about. Okay, when we give an insurance company premium, ladies and gentlemen, there are guarantees.
Yeah.
Okay, there are guarantees. And in most cases, those guarantees only happen, they're only proven to work if there's a loss of property. Remember, I said insurance in generic terms. You have insurance and so do I. We already have it. So we're doing car, phone, fire insurance, personal property. There's a lot of things we carry insurance for. And the money we give them, like I mentioned, is premium. Cup number 1. The guarantee is that if we have a loss, the insurance company takes care of it. That's the benefit. But in life insurance, there will be a guarantee one time from you, the policy owner. That guarantee is you will die. They must pay. We're talking about whole life insurance, right, Jesse?
Yes.
Help us understand the difference between whole life insurance and car insurance, or maybe term insurance for those of you out there who know life insurance.
Yeah, so term is just you simply paying a premium for a term, a 10-year term, a 20-year term, a 30-year term. There's no cash value. There's no equity in the contract, nothing that you can use. It's just you have that guaranteed payout if you die during that term.
Very good. Okay. Now, the difference between that, of course, and whole life insurance is you must die. So the insurance company knows, cup number 3, you must die. They must pay one day.
Mm-hmm.
It has to come out, guaranteed. Whole life insurance is not on trial, ladies and gentlemen. It's 200 years old in this country. Every state has it, and it's always paid out in guarantees. Even if companies change or get bought or become insolvent, the contracts actually still pay out. Whole life insurance must pay. And because it must pay, we've now made it to the middle cup. Normally, this cup is green. Today, it's the clear cup. And the middle cup between your dollars premium and what they purchased, a death benefit, a policy, peace of mind, a payout, what they purchased is cash value. Jesse, explain to us, what is cash value? Why does it look like this? How does it relate to having insurance? Insurance is supposed to cover a loss. What good is cash value? And how does that get us into the benefits of this product?
So this particular type of insurance, this particular type of relationship, it's also a contract, is not just the term of, okay, I'm going to pay this premium for 10 years, 20 years, 30 years for a potential, death in that term. This is something that you own for your whole life. There will always be this death benefit, which is a tax-free windfall to your beneficiaries, but that is in the future. It is guaranteed to happen. So that greater future number is represented today in a net present day cash value, a value. And that value is something that we also own by contract. We can access it. We can leverage it, which means we get to use money.
Love it. Okay. I'm trying to be smart, but I think I want to arrange it like this, right? Because now it's 1, 2, 3 for them.
Perfect.
Right? For them.
Yep,
left
that
to
looks
right.
good. Yeah.
Left to right.
I'm tracking with
Okay.
you.
So let us know what questions you have about this process. The process is what we're about to do and talk you through coming up. This is the product. And remember, if you decide to use, lose, or abuse this liquid net present amount that Jesse mentioned right here in the center cup, your dollars that you attributed to this policy that you put in, Jesse, point to them. Where are the dollars? Now that I'm using these, I took them out. I want to use them, lose them. What's happening to my money if I use it?
So you're leveraging the cash value that your policy has created. So when money goes into the policy, it never leaves the policy. You get the compounding, you get the growth, guaranteed, right?
Yep.
But you also have that access that you're showing here from cup number 2. So I mean, you're using that for whatever you pick to use that for.
And that's the magic behind this save and spend system. You're learning to save your money and spend someone else's. Ladies and gentlemen, your dollars, like Jesse kind of said in a long-winded form, but this is the perfect way to understand it, are still there. If we access the cash value, that's coming from the pool of money the insurance company offered us. They said, well, we offer you this entire death benefit. We must pay out one day. Cash value is simply the net representative amount. Your money is still in the game. And some of the guarantees on your dollars are they never go down and backward. They never lose value. They're always there, and they compound and grow. That's why we're not going to withdraw them. We are going to let them earn for us, give our dollars a job, and that job is to kick off new cash that we can use to finance things.
Yes.
It's a separate pool. Okay, Nelson down there in YouTube land, help my thinking. In my case, having a specific premium required wouldn't, hopefully I'm seeing this, it's kind of small. Jesse, are your eyes better than mine?
Wouldn't having mutual policies be
Multiple, must be
overwhelming
multiple.
with multiple premiums?
Good question.
I think I understand the question.
Yeah. Go ahead and.
So, I mean, sure, was it more simple when I had one policy that, okay, I pay this policy this time of the month or this time of the year, and I make a policy loan when I'm ready to take a vacation or pay off a credit card or whatever it is I'm using my policy for. Is that more simple than having 6? Sure. Do I maybe put something in my calendar on my phone to say, hey, pay this premium on this day, pay this premium on that day? But boy, I'm happy about it. I'm never upset about making premium payments. I look forward to those premium payments. You know, I'm much happier making 6 policy premium payments than I was just the one.
And the reason for that, Nelson, we understand what you're saying, though. We don't want to.
Yeah,
we don't want to. Yes. The point is why we have multiple is because when you start a policy, it's a guaranteed contract, and so the premium doesn't change. The insurance company can't change that premium on you. The policy cannot lapse depending on your health, all sorts of other factors. It's a guaranteed contract, unilateral. If you give them that money, they must make those dollars perform for you.
Yep.
Okay? That's how it works. They signed up for that on day one when you guys went into a mutual relationship together. So here's the rub. If every dollar we put in compounds and grows, gives us these separate pools of money that just keep going up, that Jesse said was income tax free, how much of your money do you want to get in there? You may make more money next year, but that extra money you make may not fit in this contract. So we've got multiple policies. Does that make sense? There is a limit to how much money I can get into this particular bank vault. Think of it in terms of a physical property. If we're stashing money inside the vault of the bank and the bank vault is yay big, so big, it won't hold double that money next year or tomorrow. It just won't hold it. It's not built to be that large. So we need more actual branches to our banking system. So I have 10. I'm up to 10 at this point because I have 4 kids and I've got a couple on me and all that because I've made more money and have more people in my family than we used to. Both of us have more people in our family since when we started. So I got to have, and I've made more money. I can't fit it all into that original contract, even though those dollars are still there, still compounding. Hopefully that makes sense for you. Great question.
Yep. Got another one when you're ready.
Yes, go ahead and read it.
Okay, so this one says, can you start day 1?
Appreciate that.
I think Simon's asking that.
Is it Simon?
Yeah, you can let me know.
Okay. Great question. I'm assuming that means start utilizing the cash.
That's what I figured, yeah.
Okay, Jesse, can we utilize the cash from the beginning?
So from the moment that you make your first premium payment on a brand new policy, year one, month one, you make your first premium payment, 30 days. From 30 days on a brand new policy, you can immediately begin using that policy. So I paid my first premium in 2016. 30 days from then, I was making policy loans and we were paying off debts that we had.
Love it. Ladies and gentlemen, the reason we say 30 days is not because it takes exactly 30 days at all. We normally say the word immediately. Sometimes we say them interchangeably. It's a great question to ask us the specifics on, because Serge on Instagram just signed the contract. Now the insurance company must make his dollars perform for the rest of his whole life. And he was just asking, look, I'd like to take loans to get to some of that cash value quickly. I have need of the money.
Yep.
He was asking, does it really take 30 days? It actually takes just as soon as the smoke clears.
Right.
Okay, that's what I always say, because, I don't know, 7 to 10 days, right? Let's get that transaction done, and then you can request the loans from your cash value. It's not 30 is the rule. It's just we are actually brokers, and we utilize several different mutual companies for this, and some of them may be a little slower, a little faster than the next one.
Yep.
But as soon as the smoke clears, it might be 7 business days. It might be 10 business days, boom, you can get to cash value. So we also want to make sure you understand that that is not a feature that is standard off the shelf. When we're doing the infinite banking concept, you need to work with someone like us. We hope it is us, because that is a portion of the contract that is an option. It's a lever we can pull, and it's a rider that does not exist automatically. So if you think that you're able to pull that off yourself, you're kidding yourself. There's always a Flo in the Progressive commercials. There's always a Jake in the State Farm commercials. We happen to be that person who works alongside the insurance companies that allow for that flexibility. That is not standard. That is not automatic.
No.
Most insurance agents, and by most, I mean everyone you know. I literally mean that.
Everyone.
They don't know how to do this.
They don't know.
We weren't taught how to be insurance agents. We were taught how to be bankers. So we know how to do that, and it doesn't work automatically at every company.
Yeah.
Okay, so hopefully that is a helpful way for us to answer your question.
So I said I was just on a phone call, right?
Yeah.
So, and this is my first phone call with this individual, but I knew enough because she said, you know, she'd retired from her career, very industrious, very hardworking. I do personally know her. So she got to the end of her career, of course, with all these conventional plans and conventional ideas and whatnot, right?
So she's getting close to retirement, you said?
Yes.
Okay.
She already has retired, and she's stepping into that next phase of what am I doing next? I got interest in business, and I got interest in this, and I got interest in that. And she's got all this conventional planning and whatnot behind her. And she even told me, of course, it's like, well, I do already have. I hear you talking about, you know, becoming your own banker and life insurance. I have some policies. Could I use those policies? And I said, you know what, maybe I will look at them. Of course, I will look at them.
Of course.
But I also know, and I told her that the answer is that they've not been built for you to use. They've been built for you to have, but they've not been built for you to use.
Right.
Somebody's going to get some money when you go,
of course,
sure.
Right?
But they've not been built for you to use. So,
right.
Yeah, for sure.
Okay, ladies and gentlemen, hopefully we're helping you out there. Zoom, our audience on Zoom, thanks for pre-registering. Want to give you guys some access to us. So go ahead and throw stuff down in your chat, if you will. I want to introduce you guys to our Facebook group. We have a new Facebook group. We have a page as well, but this particular group is perfect for a new person. So if you are a new person, which I think many of you are, and you're not in this group, this is where we start to put our day-to-day questions, themes, ideas, and help you with your knowledge in an environment that's safe to ask the questions. Okay, so we talk about Dave Ramsey in here, as you can see. For our Zoom audience, they're taking a look. We've got members in this group who have policies, some of which don't actually work with us.
Yep.
And they're talking about their experience. I got a little update from me. I became an official Nelson Nash practitioner recently, Jesse. And what that means is I am now within the coveted group of peers who follow the infinite banking concept as presented to the world by Nelson Nash, the creator of that phraseology, the infinite banking concept. So it's not the infinite investing concept. It's not the infinite saving concept. It's the infinite banking concept. We're solving for the banking function. And all of those things may be able to happen. Better investments, better savings, better tax planning. But This group is the peers who follow his system, led by his family and his legacy team. He just died in 2019, and I'm now in the club, man. I'm excited about that. And I hope you know, when you think of insurance, though, you probably don't think of people who look and sound like me in a lot of ways. 10 years ago, before you knew all this, when you're thinking about life insurance, who sells it? Give me a caricature of that person.
Just somebody at the box store.
Right.
It's a box store agent in a box store in town.
Right. And a lot of times those people may not look like us, sound like us. They're not doing social videos live week to week. Why would I watch anything that has to do with
people's questions
about
live?
Insurance? Yeah. What? So anyway, we've got that going on inside the Nelson Nash community. We are here for you. So ask your questions. We'll tell you no lies. We're dealing with guaranteed contracts. So we've got all sorts of great resources in there. Please jump in. Do leave us your 1 or 2 or 3 questions. Get those answered. I think we're now removing people who...
Yeah, you need to answer those.
Yeah, just answer the questions. Get in. We want to send you some great resources. We want to know who you are. We want to keep that community safe for people who are learning and growing just like us. It's infinite, Jesse. I haven't learned everything yet. How are you on the scale of learning most of everything that needs to be known?
Still in progress.
Okay.
Still in progress. And Nelson, you're welcome. Simeon, you're welcome. Just responded to the comments, folks saying
Simeon, we thought it was Simon.
To you, folks saying thank you for answering their questions. You're very welcome.
We thought it was Simon because it was so small.
Yeah. Will help. Yeah, Will helped us out by blowing it up. Magician
our producer, yeah, who puts all of the live events together, makes a lot of our graphic design as well. He made it a little bigger. We couldn't read you guys over there.
Appreciate it.
Okay, why don't I show you guys some other visuals? Would you like to see that? Would you like to see some examples? Do you have more questions about anything? I mean, design, companies, what you heard other people say, so you're not really sure. All of that is relevant here. And I don't like the phrase, there are no bad questions, for 2 reasons. 1, I don't think it's true.
Okay.
And 2, I have a tendency to make fun of people, which is probably not a good teaching trait. However.
But do you make fun of them in the form of a question?
I don't know. It's just, now Jesse had a previous life as a high school educator, so he's probably nicer than me, but no dumb questions. You can put anything in there. I'm going to pull up a few things. Jesse, why don't you tell us what some of your financing capabilities, what are you using cash value for right now?
Right now. Yeah. Well, at this part of the year, one good example I think would be certain taxes. So I pay certain taxes normally right at the end of the year. And here's why I wait till and I used to be the guy that I would show up in the county office and I would be paying ahead of time. Like I would be paying, a year in advance or whatever on certain things.
This is how much money I think I'll make for the next decade. Why don't you all go ahead and take it?
And the folks loved me, right? They said, oh, nobody does this.
Right.
And I thought I was being proactive. I thought I was
a good citizen.
Now I realize that I was foregoing the use of those dollars for 12 months. That's a horrible, once you recognize that it is, and I can say that, that's a horrible mistake to let somebody have access to money that you can be using to make more of it.
Especially if it's the government. I got to be honest.
Especially. That's right. So that's one example is, I have some taxes that I'll be paying right here at the end of the year. And in this past month, in October in particular, we were paying premiums on 3 of our policies. We're going to be making some policy loans before the year's up because we've got our money in motion and at work before it reaches a final destination that's not with us.
Love it. So me, ladies and gentlemen, also paying the IRS right now. So I got that extension. I got a new tax guy this past year. It's been really great. He understands that when you take cash value as loans and there's money that comes into your bank account from the insurance company, Jesse, is it taxable?
No.
No, it's not income. It's insurance.
Wait, let me answer you in Spanish. No.
Oh, got it. You guys, for our Spanish-speaking audience, thank you. So we are now working with a guy who understands that well, and so it's been a lot more smooth sailing than some of our previous relationships. We vetted some of those people. I now have a new contact, someone last week, Jesse, that I met. I knew, and I see him every year at an annual conference that I attend. Mm-hmm. He's from Pennsylvania. He's a CPA, and I mentioned this process. Mm-hmm. I mentioned infinite banking. I do this. I don't know if you've heard of it. I have an agency where I help people understand that, and he said, J-Do, he's known me now for 2 full years. This was the 3rd conference. I heard that man speak 20 years ago. I know what you're talking about.
Wow.
He said, we need to keep this conversation going. So he and I are going to be talking soon. If you're looking for somebody who can help you in the tax professional category, we might have a hookup for you.
Cool.
Okay, ladies and gents, let's take a look at, I think you can see it on the screen for our Zoom audience. I'm going to walk everybody else through some numbers. From time to time, I like to go through one of my smallest policies just to help you guys understand. We are now looking at an illustration. Jesse, can you kind of describe what an illustration is that an insurance company gives to a person? What's on it? What does it mean? And how can we use it to help us understand?
Yeah, it's a sheet with your info at the top, your name, your age, those types of things or whatever. And then it's got some columns of information. It says your age in one column. It says what year the policy's in force. And then it lays out some values. It's showing you that guaranteed death benefit. It's showing you the guaranteed access that you have to cash value. It's showing you what the potential, dividends could look like based off of what's happening currently. And of course, all the companies that we do business with, and there are several of them, they've all been in business for over 100 years.
Right.
They've been paying dividends for over 100 consecutive years. So it's not guaranteed the dividend, but it's also included there. So it's walking us through those values year over year.
So that is what you see on your screen for our Zoom audience, ladies and gentlemen. In the future, if you can register via our Zoom links, join our Facebook group. You'll see it there. You can hop on. You'll see this visual. What we've got here is a policy that I started last year on my youngest child. He is now about 16, 17 months. Carry the one. I think it's 17 months.
Okay.
And I started a very small policy on him. And I want to show it to you guys for example and reference. So if you're looking at it, you can see that male age 0. It's very small probably at the top, if you can tell. Male age 0. He was 3 months old when we got this policy in force. Jesse, how young can you be to keep your money?
14 days.
Okay, so he was well established in the 14-day category. This is an old man compared to what he could have been to start it. And you can see in column 3, we've got contract premium. Right. That was the amount of money that I picked that I was going to give the insurance company, pay premium that was going to buy an amount of death benefit. I did not get this policy for the death benefit. I did not know what the death benefit was going to be, Jesse. And that's not normally how people buy insurance.
That is not. Folks walk into that box store that we were just talking about a second ago. They walk into the box store, they talk to the box store agent, and they'll either say, yeah, I want this amount of, and it's an arbitrary number. It's always some even, I want $500,000.
Right. You can see here that my death benefit number is not a normal number.
Yep. It's just some odd number because, and this is how we start, is we reverse engineer and we say, what's the premium amount that makes sense for you to be paying? And on a child, it's going to be a smaller amount. Yep. Because that's what makes sense, of course. So, as one factor.
Yep, that's what you're seeing here, ladies and gentlemen. $1,200 a year is $100 a month. You can pay it monthly, you can pay it annually. The insurance company does not care. They'll just ask you how you want to give it to them. You already have insurance as well as I, and we pay it monthly or quarterly or semi-annual or annual. Those are the way companies take payments. So I picked $1,200, and you can see this is under the umbrella of this side of the tables that says guaranteed. Okay, so I bought insurance at $1,200, and on this baby, it bought $146,303. Another pet peeve I have, because one teacher told me this a long time ago, I assume, is I don't say the word and in numbers until I get to the cents. Okay. And means in math, and means we've now put a period and we've moved on the other side of the period. Does it not?
I'm tracking with you. Yeah.
Okay, so this is $146,303, not $146,000. That's a whole nother thing. Michael, do you agree with me?
I'm glad you got to vent that out for.
Okay. Now, nobody does it that way, but I have many years ago, I started to do that, and I think it actually makes it clearer. It's more concise. $146,303, okay? So that's what it bought. Cash value here in the middle cup is available at the end of the first year at $465. So that means, Jesse, that $465 of my $146,000 plus death benefit is what is paid up, paid off, or paid for. You can see right above that column, it says PUA. It's paid up, it's paid off, it's paid for. It's like equity in real estate, if you want to understand it that way.
Yep, for sure. That's the part that you can leverage.
So maybe I'll do that, maybe I won't, but each and every year you can see that there is a cumulative total of new cash value as I pay premiums. Here's the crazy part. If you broke out your calculator and started to add them up, you'll see that they are increasing. They are actually compounding because my dollars are what's buying them, increasing the death benefit pool as well as the equity toward that death benefit. And in this particular company, one of our favorites, there's a cash value column to the left of the PUA cash value column. And as you move down, you have to add those two together. Mm-hmm. All right. So Jesse, tell us, what does this mean? Anywhere you want to go with it. I'm not leading you at all. What is the significance of understanding what this illustration is telling us?
Okay. I thought you just particularly going to ask me between those two columns
there,
but we could talk about the whole thing for sure. Yeah. Well, there might be more parts on a properly structured policy than those two factors right there. But the paid up additions rider that Jadu's already been talking about, we're going to put that on a banking style policy because we want you to have access to that cash value that you can leverage year one right away, paying off debts or whatever it is that you're wanting to use it for sure. So, yep, you got to add those two numbers together because those two different values grow from two different parts of the policy. The basic whole life policy itself, the paid up additions rider that we put on top of it. So both those numbers walking down through. But, I mean, what it meant for me when I got my first policy was, that first number that you pointed out, year one, what's the cash value that we can get access to? Because we had about $50,000 in debt. Whew. So we were very animated to start tackling that, right? To pay that off, but also be growing this beautiful system right here at the same time. Growing our money, compounding our money, and still having that kind of guaranteed access and control over capital to pay off those bad debts that we had.
Now, Jesse, let me ask a question here in devil's advocate style that people ask us all the time. Wait a minute. If cash value, PUA cash value, and the cash value column, as we move down, add them together, is what's accessible from the death benefit, then aren't we stealing from our future generations if we use that money?
Okay. So the book that we talk about and the accolade that you just recently got from the Nelson Nash Institute. So in his book, Becoming Your Own Banker, R. Nelson Nash said that when you have a policy that's built this way and you use a policy that's been built this way, you'll ultimately end up with more death benefit than you otherwise would have had an opportunity to be underwritten for in getting it in the first place. Meaning that if you actually use the policy the way that we're talking about, pay off bad debts that you have in life with your policy, and then put that principal back in here, put that interest back in here. If you're doing something in business or investing, where you're going to put your profits, back in this system of yours. That contributes to the death benefit that you have anyway. So you're growing it all. You're growing your death benefit the more you use the policy the way that we're describing. You're growing the cash value the more that you use the policy the way that we're describing. You can do both at the same time. Those are not mutually exclusive.
I had a conversation yesterday with a potential client, and this young lady out there in the world was very concerned about her death benefit because she had two dependents or daughters.
That's a good concern.
It should, right?
Yep.
And I had to remind her that those in our audience out here who are looking at us here, Robert and Super Void and Michael, who can actually see it, I was reminding her, and they can see it right here on the paper, that death benefit in these types of policies, like Jesse said, is actually rising. Mm-hmm. It's going up anyway. So at the time you're likely to die, which I don't know when that is, but according to actuarial science, it's not today. You've done a medical exam. The insurance company's taking your premiums because they're willing to take the risk. Mm-hmm. You're going to have a much, much higher death benefit than when you started anyway. So take a look at the sixth column, I believe, 1, 2, 3, 4, 5, sixth column underneath the guaranteed side of this page. You can see my death benefit is rising.
Going up.
Now, if you go all the way to the far right column on the whole page, you can see that the death benefit right there just gets even higher. Jesse, help us understand the right side of this table and all these values. We looked at guaranteed, but this next section says non-guaranteed. Could you explain to us, could you show us, what does the non-guaranteed side mean?
Sure. And I love this phase when I'm going through this phase with a client who's applied. They've been approved for their policy. We're going through the policy together. I start on that guaranteed side because when you're wowed by the guarantees, And then you also start looking on the right-hand side, which includes the dividend. It's just levels of amazing.
Elation.
And that's still just the product. That's still not even talking about how you can use this thing to grow all of it. But the right-hand side does include the dividend. So again, that's not guaranteed, but these companies have paid it consecutively for over 100 years. So the values that you see on the right-hand side, they include the projected dividends that we're anticipating.
So when we take a look at our 3-cup setup, this little shot glass, the fourth little glass right here, is representative of our dividends. Dividends are profits the insurance company makes because not everybody died last year. They take premiums. That's their job. Their job is to preserve the buying power of those premiums and pay out claims. So hopefully the insurance company that you are partnered with, because mutual insurance companies have no owners, they got partners. Those partners just happen to be people who have whole life insurance policies. Me and you. They have to stash their profits in cash to the owners, the mutual policy holders. Ladies and gentlemen, that means that you're going to be able to get a participatory check in the mail annually from these companies. Like Jesse mentioned, 100 straight years of dividends have been paid from all of the companies we like to broker with that allow for this flexibility. So on top of your money, they're going to put a little bit of their money. It becomes your money. And I like money with my money. You know what I'm saying?
Sure.
So that's what dividends are all about. And the right-hand columns on this paper is showing you that if the company continues to pay dividends at the current rate that they paid when they printed your sheet, that's the extra money you just might want to expect in any given year if they continue to do that. But like I said, we've been in business so far so good in all of their years of profits. So does that make sense, ladies and gentlemen? That's a little bit of what you're reading here. Now, your numbers are going to be bigger. I don't suppose anybody's going to start policies this small. It's not likely that you can either. This was on a very small child, but you still pick that premium, whatever it is. But this is a great representative example about how small that it gets and about how minimum it works in your favor, because we haven't even used this product for the process, as Jesse said. So
Correct.
Jesse, could you give us maybe a little bit of a visual on, and let me check to see. I don't think
There's
we've had
one
any.
question here I'm wanting to
go
get
ahead.
to.
Go.
Okay. Well, what was your question? Maybe I can even answer that question with what
we'll
you were
come
gonna,
back.
Okay.
We'll stay with
All right. So Simeon's getting resourceful. He's asking, can you roll your 401k to start your policy? So he's already thinking big pictures, like, and that's good. I mean, that's the kind of stuff that we cover in our consultation calls. Is we talk about where you might have inefficient money in your life, where you might have lazy dollars,
where you might be losing them. They might not be lazy. They may be running away from you in that 401k. Shout out to anybody who's lost money in their qualified plans.
Me. They're magicians. They're disappearing. So good question. Can you roll it directly? No, and I'm not going to tell you what to do with your 401k, but here's my philosophy. When you know what's going on, you'll know what to do. So the more that you're learning about this banking concept, of course you're going to ask us about your 401k or IRAs or your savings account or money you have tucked away here or there, just whatever, because you're beginning to want to reckon with all of your cash flows, which is a great way to think about this concept of banking. So can you access money from your 401k? I'd encourage you to talk to those professionals that you've got that with, of course. Get their input. Awesome. You can. Again, I'm not telling you what to do. I've had 401ks. I made my decisions. I decided to move capital where I could get to it.
So did I.
I sucked up the penalties, the taxes, all the different things. Again, I'm not telling you to do that, but what I figured was that over the course of my lifetime, I could do so much more with that capital by having access to it, guaranteed.
So it was very interesting that a couple of years ago in 2020, with all the pandemic success of the big pharma and success of the government, making you fear them even more,
right?
They did give you an out, and they let you grab your 401k money that was qualified and get it out without those penalties. You did have to pay the taxes, but they even deferred them over 3 years. Ladies and gentlemen, I did say the word qualified on purpose. Life insurance is an unqualified asset. Qualified means that the IRS says, you get this money in, we won't tax it till later or in a certain way. Life insurance is not a government-sponsored program.
Right.
It's unqualified. So you cannot roll over qualified money into unqualified money. Remember, dollars that go in here will be guaranteed to compound, grow, and cash flow for the rest of your whole life. And when you access that money, it is not taxable money. So sure, you want to play with it over here, don't you? You want to play that game all day, I'm sure, like me and Jesse, who made our decisions about some of the qualified plans that we had. Roth IRA for me, but
and other folks make other decisions too. Right. So you can't roll it. And, you know, some folks decide to keep their plans, their conventional qualified plans. They decide to keep those, but maybe they don't fund them actively anymore. They decide to keep them, and they're going to fund them, but only up to the match. They're not going to be paying, you know, the financial guru recommended 15% or what have you, right? So you can decide that for yourself, I believe, based off of what you learn here, but I would encourage you to keep learning and, keep understanding those inefficiencies in those qualified plans.
Simeon, was that a good answer for you?
It's a great question. Appreciate you asking.
So you can roll qualified stuff to other qualified stuff. You can roll non-qualified stuff to other non-qualified stuff, but you can't roll your qualified plans that you've locked up, gone into business with the government. They want their money, don't they? They're just deferring those taxes until later. That 401k is going to be taxed, and you just hope there's money there. The problem is you hope there's money, so you're going to have bigger taxes.
On that note, I was reading, I think it was 7 new 401k changes over the next 3 years, including 2023. So finishing
Are they
up
positive for the holder?
And before, so here's what I knew before I read what they were, right? I knew that it was, of course, the government enabling you to do certain things like give them more, give them earlier access, and just all the things that's going to just lock it up sooner, lock it up longer, nothing advantageous.
It's a no for me, dog.
Yeah.
It's a no for me.
For the owner.
Yep. Yeah. Okay. Now, you guys, we've gone over this pretty simply, but the 3-cup setup, is that a great way to understand it? Are you learning something? Michael, I can see you on Zoom. I'd love a thumbs up, thumbs down. Hey, I'm starting to understand this a little bit better or a little bit easier. Or, hey, this is kind of new to me still, about this system situation. Okay,
says yes, thank you.
I got that. Okay, cool. Yes, I mean, we answered that, hopefully. Our Instagram community, welcome. Each and every Thursday at 3:30, we go live on Zoom here. The Banking Bros channel are powered by the Cash Compound. Boom. So Jesse and I are coaching you up today. We'd love to give you a one-on-one consultation about this process. And if you click the link in the bio, there is a 60-minute presentation, a video recording, shows you numbers, shows you how to get out of debt using OPM, other people's money. Whose money? Of all crazy things, a mutual insurance company. They'll loan you all the money in the world. You just have to have an account with them. So we teach that, okay? Having life insurance built for banking will allow you to save your money and spend theirs. Okay, Michael says, oh, great question. Here we go. If the dividend is not withdrawn, does it grow and compound? Great question. Here's my visual back. I'm partial to the 3-cup setup, Michael, so I got to show you the visuals. All right. So remember what dividends are, ladies and gentlemen. Dividends are profits from the insurance company that has no owners, so they give them out to policy owners. That's me and Michael now. Okay? So at the end of the year, they declare their dividend. They declare some profits. Michael has been in the game with them with a policy, so he gets his cut. His cut is based on, you know, his level of ownership, his participation so far. So whatever he's given them, whatever, they give him his cut. There's several things you can do with this.
Yes.
You don't have to do what I mentioned. You could take it in a check.
Mm-hmm.
They could put it in a interest-bearing account for you.
Mm-hmm.
Now, our favorite thing to do is dump it right here on top of our dollars. So here's Michael's question once again, Jesse. It is all yours. If the dividend is not withdrawn, does it grow and compound?
So, yeah, multiple options. This is the one we recommend the most, that you use that dividend to buy. And I recently, because I said we paid some premiums recently, I got some statements about what our policies look like in their 3rd year or 4th year. So we use our dividends. This is what we personally do as well. We use our dividends to buy paid up additional insurance. So if these dividends are buying us paid up additional insurance, paid up death benefit, so we've already talked about how that number on the right-hand side of the sheet was growing. So the death benefit cup's growing. Also, that inherently means that the cash value grows also. And the nice thing about those dividends, and Michael did mention this, or no, I already did. We've already said that it's not guaranteed, the dividend itself. But the nice thing is that once you do have it, There's no going back. It doesn't go away after that either. It can't be taken from you. Once it's bought that insurance, it's bought that insurance. And because it's bought that insurance, it's giving you a greater cash value also.
So, Michael, let us know if that helped you answer it. If you would like to take dollars out of the red cup, that would be a withdrawal. Yes? Withdrawals are the funds that you've placed inside of your cup. So you told the insurance company to do it for you, but you've put your premium in this cup. But so far, we have only talking about taking loans against their pool of money they gave you. That's the cash value cup here in the middle, cup number 2. And if you take those dollars as they've gotten bigger now because they put in more dividends for you, that's not a withdrawal. That's a loan. But if you want to take your money out, you could, couldn't you? That would be a withdrawal.
There might be a time, too, also, for folks that are having a conversation with us perhaps about passive income years in life.
Yeah, once you get past that income time where it was coming from your JOB, well, maybe you want to withdraw those dollars. But this is how it works, sir. You can withdraw up to what's called your cost basis, Michael. Cost basis is you can withdraw every dollar you've put in that red cup, cup number 1, non-taxable. You put it in there, you can withdraw it. Now, if you take those dollars out, it's going to stunt the growth of your policy, right? Because you've now pulled dollars out that were guaranteed to compound and grow and buy you all that insurance. But you can take them out. That's why Jesse mentioned we don't suggest any of that until you're probably not working anymore and 90 years old. But you can do it. And the dividends are also in that cup. Once you have withdrawn more than you put in, because this cup now holds more money than you put in, the insurance company gave you dividends on top of your contribution, your cost basis, they become taxable. Okay, so I wouldn't suggest taking them out. I suggest just take the money it made. That's in cup 2, cash value. That keeps getting bigger and bigger. Okay, but yes, they compound. All that to say they compound. You probably figured that out by now. If they put those dollars in, those dollars now have to compound for the rest of your whole life. Everything that goes in cup 1 that's contributed to buying more insurance from this policy continues to compound. That's why dividends, my friends, get bigger every year because now you've contributed more to the game. Michael, does that make sense? The dividends have to keep getting bigger next year because there's more dollars in there. You decided to put it in here, and they say, well, now that's part of the whole pool. So we have to give you a bigger amount next year. So they just keep going up. And if you want to take a look back at our example sheet from my son's policy from last year, you can see that. The dividend column over on the right-hand side is going to be the, look at it from the total net cash value standpoint. You can see that they keep getting heftier and heftier. If you look at any year and you look at the previous year, like subtract the previous year from the current cumulative total, you can see dividends are getting bigger every single year. It's buying you more insurance and it's paid up. So it's cash in cup 2.
That's beautiful because no matter where you're at in life, when you implement this process, whether you're an employee, whether you're self-employed, you run your own business, or whatever it is that you're doing, there are only 2 ways to earn money. People at work, that's whatever you're doing in the world, right? And then money at work. So this capital being at work for you, making more money.
Yes. Okay, so yes, dollars that are given to you in dividends each and every year do compound. They go right on top of the money that has all the guarantees on it. So cup number 1 is where all that stuff, anything that goes in there is guaranteed to compound and keep going. So yes. That was the long answer for a short question.
That's a good question. Michael's asked some good ones.
Okay, appreciate you guys out there. So remember, friends, that we have these lives each and every week. We go live on TikTok a lot. Jesse and I both monitor chats, have conversations with people, and help them understand stuff, but they don't give us good feedback normally. They give us feedback, call us names, and stuff like
Mostly
that.
you.
But we
because they see you. So
yes. So we appreciate the questions that you contribute to this. Anybody out there watching us on YouTube still live for the first time, let us know that you're here. Let us know where you are living in from. On Instagram, if there are people out there, we'd love to hear from you as well, and we'll answer your questions. All right. What's up? We see Super Void out there. Appreciate you, my man. Okay. Any questions or concerns, comments, substitutions, exchanges, or refunds? We'd love to help you get this party started personally. My wife just texted me, did you wash our daughter's lunchbox? Yes, I put it in the washing machine last night.
Stud.
It was like a cloth lunchbox, right? And it was nice when it came out. Okay, what other questions did you guys have? So, hey, real life is going on in between all of this, right?
That's right.
So don't worry, my wife has 2 policies on her, and if she kills me because I wasn't supposed to actually wash that lunchbox, she's going to get a death benefit. Okay? So I'm just trying to make it all relevant for you. What other questions, comments, concerns do you guys have out there? We work in an environment, ladies and gentlemen, that everything always gets better monetarily. Mm-hmm. Everything, every time, every year, every month, there's always new cash value. Cash value must grow into that death benefit, but it has a hard time catching it because the death benefit keeps getting bigger. So there's always guaranteed more money when you go look next time, when you go log in next time. And you and I need more money next time, do we not?
I'm never upset that it goes up.
So we work in an environment with a guaranteed contract built to do that from day one. You get paperwork just like I showed you. Your numbers will be bigger. That was the smallest policy you could possibly do. And we're going to help you understand how to use that money efficiently. Banking is not the product, but we spend a lot of time with the product just ironing out what it is, how it's guaranteed to work. The process is all about you being the banker. Mm-hmm. Let's pay off some debt. Let's finance some vehicles. Let's go on trips, but let's not spend our money anymore. Okay? What other questions do you have? Questions, comments, concerns. Our Facebook community can unmute if they need to ask us a little something. Robert, anything out there? Super Void, we'd love it from you as well. Jesse, what are you thinking? I saw you flinch. I thought you had something to say.
No, man, I'm good.
Okay.
We've had some good questions. I would encourage everybody to get on the Facebook group if you're not already. That's where you're sharing nuts and bolts. I'm sharing nuts and bolts. I mean, we're sharing the things that we're doing on a regular basis with our policies.
Very good.
Speeding up the learning curve of the group.
Yeah, we didn't have these resources when we started 9 years ago. We used to call each other every 6 months and go, hey,
what are you reading? What are you doing?
Yeah, I think I understand what it says on this paper. And then we realized 6 months later, that did not say that. Even though I agreed with you. Yeah, it does say that, doesn't it? We didn't have. So that's what these communities are all for. Robert, appreciate you, man. Robert says he set up a meeting with you.
Fantastic.
Okay.
Looking forward to it.
Michael was looking for you earlier. I'm sure he's on your calendar as well.
Super.
And we'll get you started or just point you in the right direction if you're just not ready to start yet. But remember, how much money would you still have if you kept the dollars you made so far in life?
It's mind-blowing.
Yeah, isn't it?
Mind-blowing.
What's crazy is, I'll give you a little insight, ladies and gentlemen, because it's a small family meeting here. Over the course of 8.5 years of me putting dollars inside premium of now 10 policies, it didn't start with 10, started with 1. I'm very close to hitting the mark of $200,000 total going into policies.
Okay.
Premium, okay? Lots of policies. Some are old, some started last year. You saw a small number. But you start to think, holy cow, how much money have I made in my lifetime? Because normally my bank account says $207. Mm-hmm. It's never been higher than that, it seems, right? It's especially when my wife leaves Target. And I'm like, I've saved that amount, and it's still compounding for me right now. Very powerful. Some of you have numbers way beyond me. I came out of school in 2007, and I started making, I made maybe 30 grand that year, the first year out of school. Some of you have been making 30 grand per month out there in whatever you do. I don't know who you are, what you do, $10 an hour, $10,000 a day. I don't know. But to think that in 9 years, I've saved that amount. How much money has left my family prior to that? I didn't know what this was till I was 32. Mm-hmm. You know, interesting thought.
Yeah.
I don't know if you've kept track of those
I like
numbers
tracking
in
that
your
kind
life
of stuff.
too.
It's incredible to think about. Yes.
I'm about to hit that number, but
I love it.
I've still got it. Okay, ladies and gentlemen, we haven't had a new thought, question, concern in a minute or two, so we're going to wrap things up. It's been about 1 hour. Thank you for joining us. Remember, we work off referrals here. We're trying to educate first, and as you can see, the AMA has cost you about $0 so far. The consultations are free as well. We want to hook you up with a coach for your consultation. So please let us know what we can do for you to help you understand how to keep your money growing and cash flowing. We suggest you save your money, spend someone else's. That's what we do here. Okay, Nelson's got one. Jesse, maybe you're going to take us home with this thought. I'll read it for you. If purchasing a car, Nelson says on YouTube, is there a certain process involved, or is it just taking out policy funds as a loan?
Fantastic. So from the very first policy loan that I made in 2016 to just this year, right? They ask you 2 questions. They ask you, okay, Jesse, how much of what's available do you even want us to send to you? That's question number 1. And then question number 2 is, do you want a check in the mail? Do you want direct deposited to your account? What do you want? And I tell them, and they send it, and that's it. All I know is that for everybody that's had a bad experience in the commercial banking system of, will they approve me for this? Can I apply for all that red tape, all that paperwork, donating a kidney, assigning your firstborn to them or whatever. When you just get down to where, financially speaking in life, you answer those 2 questions and you do what you want to, it's a different world.
So, Nelson, hopefully you understood that. Yes, when we take our cash value down to the car lot or the financing company and we want what they've got, the transaction's over. Mm-hmm. Now, we've got a banking system that's going to allow us to recapture the dollars that went out, to earn the interest we would have paid other people, because our money is not lost. Our money is still compounding and growing while we sent them money down at the Ford dealership. Yep, it's Ford, right?
That makes us, that's right.
It's Ford.
I'm glad you remembered that.
Man. My man.
And that makes us more profitable. That makes us better positioned next time for the next car. I mean, I'm probably not in my last car. You're probably not in your last car. It just makes us better positioned for the next car that we go to get to.
Yes, you got it, right? We don't owe them anything, because if you have the cash value to pay for whatever ride you're trying to get, you're done with them. And now you can set up a personal amortization system for your own recapturing of that money. We'll walk and talk you through that, actually, when you have that question and it's a part of your life today or this weekend because you want a new car. Great. We're going to help you chart that out on your own terms and conditions. Yeah. Great question. Ladies and gentlemen, hope you've enjoyed our AMA this afternoon. Jesse, where can we find you online if it's not, they don't like me as much and they say, Jesse explains it in a way that's a little bit different than Jay Do. We've seen him on his channels. Where can we find you coaching?
Sure. So my website, www.durhamtalents.com. I'm on all the social medias, but I've got a YouTube channel and podcast that I've been doing for over 3 years now. That's where you can find me.
Love it. Ladies and gentlemen, follow us, find us, ask your questions, comments, concerns. CashCompound.com and thebankingbros.com if you want to find me specifically. Save your money. Spend someone else's. Let's go. Appreciate you guys.
See ya.
Thank you guys. All right. We'll see you next week.